Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Lawrence Lewitinn and Emily Parker are off today. All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently trading at $48,032. Bitcoin slightly up about 1.3% over the past 24 hours. And the CoinDesk Ether price ETX index is at 36.26, ETH charging ahead over 6% for the day. And the new DFX CoinDesk DeFi index is trading at 704. DeFi also advancing quite a bit, up 8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, looking at our top stories. Well, the U.S. government and regulatory chiefs are set on regulating the crypto industry. SEC Chair Gary Gensler delivering lengthy remarks this week before the Senate with the aim of drafting new, clearer rules for the crypto industry. Gensler made one particularly notable comment, saying that the publicly traded crypto exchange Coinbase is offering, quote, dozens of tokens that might be securities without being properly registered to do so. It's a conversation everyone in the crypto industry is having right now. And joining me now to discuss is Bill Barhydt, CEO of crypto trading firm ABRA, a crypto prominent personality in our industry. Welcome to the show, Bill. So Gensler was touted as a knowledgeable MIT professor in the crypto space. He taught courses on blockchain at MIT. Potentially, people thought he might be crypto-friendly. But Brian Armstrong, CEO of Coinbase, tweeting he's not so sure. And when we compare that to the Trump administration, where regulation was, let's just say, different. In one case, our CoinDesk writer, David Morris, writes that former Trump advisor Steve Bannon and Brock Pierce were business partners. Brock Pierce, of course, another prolific investor in the crypto industry. Brock went on to co-found Block One, which raised billions of dollars from one of the biggest ICOs of all time, EOS, and that money has largely disappeared. And so when reflecting back on this, what is the right balance of regulation?
Well, I think there's several components to securities regulation. Okay, let's zero in on securities since you asked about Chairman Gensler. I think there's a difference between retail, there's a difference between institutions, and there's a difference between trading and primary offerings. Okay, primary offerings the models are very, very clear. The rules are clear. There are hundreds and thousands of lawyers who can help you structure offerings, okay? And it's very clear that during the ICO boom, you mentioned EOS and others, those would have been security offerings under any regime, SEC regime, regardless of who was the chair. And honestly, most of them got away with a relatively minor slap on the wrist relative to the amount of money they raised. So good for them. Now, what's different is trading. And then we have to talk about retail versus institutional, right? On the trading side, what we have is we have the SEC saying, well, there's potentially dozens of securities out there because the chances that all of them are commodities is very, very low. But you have a lot of people inside the SEC capable of telling us what's a security and what's not a security. So why be so opaque and vague about it? Give us a list. Say, our determination is these are securities. But you can actually go further back than that, because if you're saying that they're listing securities, why not go back to the very issuance of those and say they were securities then and they're securities now? Or like in the case of Ethereum, where Hinman said, hey, it probably was a security during the offering, but it's probably not or isn't now because it's sufficiently decentralized. They don't help at all with that. They give us the Howey test, but that's 50 years old or decades old, and so you can't. My opinion is you can't really have it both ways. Give us some clear indication of what's a security, what's not, and everybody will gladly comply.
Mm-hmm. Speaking of that confusion, you've had a run-in with the SEC or ABRA has over allegations of improperly selling contracts, providing synthetic exposure to U.S. listed stocks and ETFs without proper registration. So that was settled. But what did you learn from that experience?
Well, I learned it's very expensive to have a conversation with the SEC. Okay. If you actually looked at what we agreed to, it was mostly an international issue. Basically, we were offering what's called synthetic stocks outside the US, and answering the questions and subpoenas. It costs millions of dollars for a startup. And at the time, we were much, much smaller than we are now. And it honestly wasn't worth the cost of the discussion. So we agreed to settle. And actually, I've signed documents saying that I won't say much more than that. And so, someday I'll write a book and I'll tell everything. But for now, that's basically what I can say. And we agreed to basically turn off the product. And honestly, from our perspective, because the cost of having the conversation was literally millions of dollars. And we weren't even making millions of dollars with the product. So it wasn't worth it, even though we were offering it outside the US. So that's fine. We agreed to it. We moved on. Maybe if I was Coinbase, I would have had a different perspective. I don't know, but I'll stop there.
Well, that's something that Coinbase is having to consider right now. I mean, should they just launch their latest yield product, their lending program, and face litigation and figure out the regulations that way, or wait a lengthy amount of time as their competitors who have already launched their products continue to innovate and grow? Any thoughts on that? Is there? So I mean.
Look, in some ways, this starts to smell a little bit like the Ripple case, because the products are totally different. One was a straight up sale, which was probably a securities offering when they did it, but the SEC waited 7 years and effectively gave no guidance afterwards. We don't know if there was discussions between them, but any sane judge is going to look at this and go, why did you wait 7 years and let them do umpteen security offerings before you decided to sue them? But in the case of Coinbase, like it's the analogous comment would be, they asked you to explain why you think it's a security and you refused.
Yeah.
So, yeah.
Oh, ABRA has a lending program. It's also very different. It allows users to deposit crypto as collateral to receive credit in dollars. It is different, but is there a concern that it could run afoul of securities laws because it's so unclear?
Yeah, we lawyer up like everyone else in the space, and we took a very different approach than others in our space. We actually issue the ABRA Earn accounts through a trust bank, Prime Trust. So when you sign up for ABRA Earn, what you're actually doing is you're signing up for a trust bank account. You're going through the standard so-called KYC process, and the ABRA app is actually integrating you directly with Prime Trust, and all of the interest is paid through that trust bank account. To my knowledge, we're the only company in the space that does that. And you'll also see us issuing a series of funds in the coming weeks that also offer accredited investors the ability to earn yield that way, which are registered, but it's a different animal. So I think we've taken a different, in my opinion, safer approach to this space, but it remains, and that doesn't mean I'm saying they're securities. I actually don't think they are. But independent of that, we've also taken a different approach in terms of how we issue and sell the product in the first place.
In other ways that Congress is looking to regulate the industry, the House Ways and Means Committee is proposing a bill that would take a look at wash sale rules on crypto, and they're also looking at increasing or reversing what the Trump administration did with the top capital gains rate, increasing it to 25% from 20%. Fair? Your thoughts?
Look, I mean, I have a very different perspective on what crypto really is. It's a stream of ones and zeros. The idea that a UTXO, which most people in the CFTC may not understand what that is, that's a commodity. I just throw up my hands and I go, okay, that's what the government's decided, so be it. But on the other hand, if we're going to put it all in the same bucket, maybe wash trading for other asset classes, and this should be on par. I get that. Okay, we can make that case. On the capital gains, it's just more insanity. I mean, I have friends that are moving to Puerto Rico. At this point, I think the government needs to understand, and look what happened in China this year. And that economy is taking a significant step backwards because of the government interference in what effectively was a tech boom. They didn't want a tech boom, so they basically shut it down. That's crazy. That's what's driving capitalism, which is driving people out of poverty in China. And if you want to basically start moving in that direction in the US, fine, but you reap what you sow. And so they need to be very, very careful here in terms of trying to stem a tech boom, which is what's driving the sole deflationary aspects of this economy, right? Every other aspect of
Well,
our economy is inflationary except for tech.
In the case of ABRA, you're going through the obstacles. And winning at it, might I add. You've recently raised $55 million in a bid to develop offerings for wealthy and institutional clients. This is the latest. This Series C funding round was led by Ignia and Blockchain Capital and includes new investors such as Kingsway Capital, Taiga Investments, and the Stellar Development Foundation. So congratulations to you on that.
Thanks.
And I wonder what was different about this funding round compared to previous funding rounds, given the state and the maturity that we are in the industry right now.
Well, the number of kind of growth stage investors, later stage investors, just the number of investors overall interested in the crypto space versus where we were when we started the company, when no one wanted to talk to us and you couldn't say the word Bitcoin in the meeting, has exploded, right? Everybody wants to talk to us. Everybody wants to understand where the space is going. So there's a certain amount of free education going on when you're talking to investors, of course, and you got to get through the chafe. But ultimately, the number of people that want to play here is exploding. From family offices, we had a lot of customers invest. That shocked me. We had I don't remember the exact number, but it was dozens that actually came to us proactively and said, we would like to invest in ABRA. And so,
and do you have aspirations of going public?
Sure. I think, look, if you're going to be an important player in what's ultimately going to be called crypto banking, all right, you need staying power. And I think that is very capital intensive. It requires a lot of market trust and awareness. And I think that's best suited for public companies today. Now, the irony is that may be better suited for things like DAOs in the future, but we're in 2021 still. We're not in 2040. So in 2021, 22, 23, I think a public company vehicle is probably best suited to own the crypto banking space or a big piece of it. And I think it makes sense that would be an ABRA's future.
And is that the timeline you see yourself or ABRA going public?
I don't know. It's tough because we have grown so fast. I mean, we were less than 25 people at the start of 2020, and we'll probably be 300 to 500 by the end of next year. And so managing the growth is challenge one for us to make sure that our customer experience is just as good when I was doing a lot of the onboarding for some of our early high net worth customers as when others will be doing it next year, and maintaining that quality of service is priority one. If we can do that, when we get into those hundreds of employees, then I would say, yes, we're ready to be a public company. And then, of course, there's the predictability in revenue and that goes along with being a public company when we're in a space that's still very volatile, right? I mean, everyone in the space had revenues go through the roof in Q2, and everybody's trading volumes came down in Q3. That's not predictable. And so public markets aren't necessarily a big fan of that, which you've seen, for example, in the Coinbase price. So
the roller coasters are predictable. The regulations are predictable, but it is admirable, Bill, that you are fighting and charging through it. So appreciate your insights and love to see you continue in your development. And congratulations on your raise.
Thank you.
All right.
Thank you very much. Appreciate it.
ABRA CEO Bill Barheit. Coming up, checking in on Asia and a crypto markets update with Park Pine Capital. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, September 16th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, it's not been the easiest of years so far for some in the cryptocurrency mining industry, with China's clampdown causing actually a mass exodus of miners from the country. But that hasn't stopped one player from prospering. Find out who, how much, and how they did it. We'll take a look at what's driven those numbers and a whole lot more coming up. All right, first up, let's get straight down to it. Despite China's clampdown, cryptocurrency mining hardware manufacturer CANAAN has seen its revenues go through the roof. The company reported its strongest ever quarterly sales, up over 500% from the same period last year. So how exactly did they do it? Forecast News' Timmy Shin has more.
The increase in Bitcoin mining machines CANAAN delivered saw the total computing power sold hit 5.9 terahashes per second last quarter, and that meant net revenue for the quarter soared to $167.5 million, a leap of almost 170% from those achieved in the first quarter. The company says its strategy going forward is to increase its market share in the Bitcoin mining machine business, and that it is confident despite industry-wide challenges, including wafer supply instability and regulatory uncertainties in various countries. For Forecast News, I'm Timmy Shan, Taipei, Taiwan.
Meanwhile, crypto investors in Korea get ready to pay up. South Korea's finance minister says taxing crypto can be delayed no longer. Forecast News' Danny Park has more on what it means for investors and the crypto industry in Korea.
South Korea's tax law was amended last year to include cryptocurrency, stipulating that annual crypto capital gains of over 2.5 million Korean won would be taxed 20% from January 1st, 2022. A backlash from investors and experts followed immediately, pointing out how the regulatory environment is not yet fully structured, especially protection measures for crypto investors, and several lawmakers proposed bills delaying it by 1 to 2 years. On top of that, crypto traders argued it was unfair, as while crypto income over 2.5 million won, or approximately $2,100 is taxed, the threshold for stock gains is much higher, starting at 50 million won, or around $42,000. However, the finance minister Hong Nam-ki spoke on Wednesday at the National Assembly that delaying the tax law will only cause market confusion. One expert told Forecast News that crypto taxes should be no different from taxing stock gains.
국세청에서 주장하는 건 이게 금융자산이 아니라 기타 자산이다, 무형자산이다, 이제 이런 식으로 주장을 하는데 부선 자산으로 분류하는 거에 관계없이 성격이 비슷하면 주식하고 마찬가지로 양도소득세로 과세하는 게 맞지 않나.
However, Professor Lee agrees the tax should take place as scheduled, saying where there is income, there should be tax. For Forecast News, I'm Danny Park.
And finally today, we've seen criticism from China in the past few days over NFT sales, but now US-based platform OpenSea is under fire. The platform has issued a statement admitting an employee made purchases of items before they actually appeared publicly on the site. While the statement does not identify the employee, a member of the NFT community took to Twitter, accused the company's head of product of allegedly using secret wallets to buy items ahead of listing, only to sell them on for a profit. The platform says it has introduced new internal policies to prevent it happening again. But let's talk about a wider industry issue here. Speaking to Forecast News on Word on the Block this week, Cardano founder Charles Hoskinson suggested that's not the only issue the industry should be wary of, saying money laundering is also a concern.
So there's a lot of evidence the Treasury Department's been tracking
That's right.
where people are basically using NFTs as a mechanism to legitimize unlawful funds. So you just create an NFT, you buy it from yourself, you say it came from someone else. Oh, look, this picture of a stone sold for $5 million, and I just made it out of nowhere. I have no idea who the counterparty is.
Sounds like the NFT industry could be in for tough times if it doesn't work harder on self-regulation. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, checking in on Bitcoin. The CoinDesk Bitcoin price XVX index is trading above $48,000 right now. Bitcoin slightly up about 92 basis points. And the CoinDesk Ether price ETX index is above 3,600. ETH also advancing 6.3% over the past 24 hours. And the DFX, CoinDesk's DeFi index, is right now trading above $700. DeFi charging ahead over 8% for the day. Joining us now to discuss the crypto markets and more is Ahmed Shabana, Managing Director at venture fund Park Pine Capital. Welcome to the show, Ahmed. So one of the stories we're tracking is definitely Ethereum. Over $1 billion worth of Ethereum has been burned after the EIP 1559 update so far. That's the amount that's been burned. And a percentage of the new ETH supply being destroyed to control the supply of ETH and as part of the ETH 2.0 upgrade. So we now see ETH charging ahead, crossing the $3,600 threshold. Do you see ETH as a store of value or deflationary asset? Or what is the value proposition of ETH?
Christine, thank you for having me today. Definitely. The rise in price is not just the amount being burned, it's over 300,000 Ethers burned. But if you actually see the real use potential of Ether, and that being the development platform for choice in a lot of the startups that are really well-funded and backed, you would really understand why the demand and adoption is increasing. And making Ethereum much more growing at a much higher rate, much more adoption than Bitcoin, making it really bigger than all of the companies that you probably know about, like whether it's PayPal or Bank of America or even Visa. So it's actually the use case. That's what we think. And this is why we've been very bullish on Ethereum since over a year.
Mm-hmm. What coins are you bullish on compared to, are you still invested in Bitcoin, or now are you turning your sights on Ethereum or DeFi protocols?
Well, we support we would say 95% of our strategy is Ethereum. We're very, very focused on backing Ethereum-based companies and that token in general, but we definitely going very bullish on the whole crypto space, but super focused on Ethereum. We really believe in that use case. And even before all that increase, in our DNA at Park Pine, we really support CEOs like Bill, and just that potential even outside the US or Europe and Africa. The increase we saw at 1,200% increase in growth in crypto market in just Africa. It's just insane. So we are really confident that this is a great way for us to support these entrepreneurs globally.
Supporting
so that's
Bill
the focus
from
we're
ABRA,
in.
who we just spoke to earlier.
Exactly.
What about Ether alternatives such as Solana and Polkadot, and Algorand, which we've seen rising, or we've seen with a lot of volatility as they still grow their projects?
Yeah, well, it's definitely amazing how Solana has been able to grow. You're talking 8,000%, or if I'm not mistaken, up till today. But the downtimes
8,000%,
says something
year
about
to date.
Sounds like the downtimes there's a bit of a technical work that needs to be done. So all of these alternatives will catch up. But if we're talking, it depends. If you're talking about investment for the average person or an institutional investor, or if you have that kind of capacity to expect that volatility and go with these alternative coins, go for it. But I think generally the market will catch up as a whole when it comes to these alternatives. And every single platform will have a definitely use case and a focus, and it will become more clear which industries, which companies are going to be going with these tokens or these alternatives.
What do you foresee in the price of Ethereum by the end of the year?
Well, we're hoping definitely above 7,500 with this crazy week of the SEC concerns. And but it's not just us. I think everybody, like the recent talks about how it's going to even exceed, Bitcoin's going to exceed 500,000 or even more than 100,000 by next year. It makes the whole projections of Ethereum making 7,500 not as a super optimistic. It's actually a bit conservative. But yeah, we're very optimistic about that. Given 240% increase to date compared to Bitcoin up 38%, it's pretty makes, I think, everybody optimistic.
Yes, definitely a lot of ears perking up to that figure. Ahmed, appreciate your insights. Thanks for coming onto the show. That was Park Pine Capital Managing Director Ahmed Shabana. All right, coming up, a Web3 investment thesis by Future Perfect Ventures' Jalak Jobanputra, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
All right, welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. All right, so talking regulation. So there's a crypto tax loophole or wash sale, which is being a change that is being investigated or explored by the House Ways and Means Committee. Wash sale, of course, is when you sell your crypto at a loss to record the tax loss, but buy it back immediately to reap any future gains. The House Ways and Means Committee is also looking to increase capital gains. The rate will increase from 25 to 25% from 20%, basically reversing the changes of the Trump administration. Do you see these changes going through?
Hey, good morning. Yeah, that's, I think, the biggest question, because this is, those proposals that you just mentioned are part of the Democrats' $3.5 trillion reconciliation bill. So it's really going to depend on what happens in the Senate. I think, there's, I believe, enough support in the House to pass this overall package if and when it is completed. But you have Senators Joe Manchin and Kyrsten Sinema, who are, at least last time, they publicly spoke about this, they were opposed to the idea of passing such a massive bill. So, both those senators spoke with U.S. President Joe Biden yesterday, and, it remains to be seen whether or not that's shifted the needle for them. But at least at the moment, that's kind of where the actual calculus seems to be.
Mm-hmm. And is there any update on who these CFTC nominations may be? We have a lot of empty seats on the Commodities Futures Trading Commission right now.
Yeah, earlier this week, U.S. President Joe Biden announced that he intends to nominate Professor Kristen Johnson from Emory University and Christy Goldsmith Romero, who is currently a Special Inspector General at SIGTARP and has also lectured at Georgetown and University of Virginia. And what's interesting is, both of these candidates have spoken out or lectured on or written, reports on crypto before. So, both of them are very knowledgeable in this industry. Biden also announced or, says he plans to nominate acting CFTC Chair Rosalind Benham to a full term at the heading up the agency. So that would at least be a little bit of stability at that position.
Mm-hmm. How do you think this will be different from, say, Christian Carlos when he previously chaired the CFTC?
Yeah, I think that remains to be seen, right? Rosalind Benham, as chair or as a commissioner rather, he said, he's encouraged by crypto. He found it innovative. He hasn't indicated yet if he's going to be, a full-blown champion of crypto like, Heath Tarbert or Christian Carlo were. But at the very least, he has been paying attention to this industry. And, it's very possible that in the near future, we're going to have multiple commissioners who have all, spoken out about crypto or, taught on crypto. And so if nothing else, we're going to have a CFTC that has, quite a bit of crypto knowledge under its belt, and it, that could translate into actual guidance or regulation.
Right, and that is certainly Gary Gensler's aim. Thank you, Nick, for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, earlier this week at the SALT conference, I had a chance to speak with Jalak Jobin-Putra, founder and managing partner at Future Perfect Ventures. Jalak made a name for herself as an early investor of the internet and as an early investor of the blockchain space since 2013. If you want to know where she thinks we are in the development cycle of Web 3.0 and where to invest, you might want to hear her advice. Have a listen.
Well, over the last year, we've seen huge growth in the sector, as you've been covering, and we really hit an inflection point of more institutional adoption, more consumer adoption, but we're still at a very small percentage of the world's population that actually has a crypto wallet that interfaces with cryptocurrencies. But whenever we see surveys of institutions or individuals, they all say they want more exposure to cryptocurrency and digital assets generally. And so the next 5 years, I think, are going to be the golden age of investing in that tipping point of how do we create applications, how do we create the infrastructure so that all 7 billion people in the world, or close to it, have a crypto wallet eventually and can buy, hold, sell cryptocurrency as well as digital assets. We've seen NFTs grow over the last year. There is a lot of exchanges that are emerging, a lot of data that needs to be mined and analyzed around the activity that's happening. So all of that infrastructure is what I'm most interested in.
And what are the parallels you're seeing from Web 1, Web 2, and now Web 3 in terms of where you want to invest in? Where are we right now in the cycle?
Well, it very much depends on the day. Okay. So when I first got into the crypto sector in 2013, I would often say we're in 1993, 1994 internet. Still very clunky. We really only had Bitcoin and a few other crypto assets. Blockchain infrastructure was in its infancy. The transactions were slow. Interfacing with wallets wasn't easy, and so it was not accessible for the average person. And we're still actually in that stage, but we've now moved to the fact that we now have people on the street buying NFTs, asking about NFTs, people asking, how do I buy Ethereum? And that reminds me of 2000 internet, when people started buying, books on Amazon, started thinking about, wow, I can actually transact, I can actually use email, and I think we're at that stage now. And so if you look at what's happened since 2000 in the internet to where we are now, I still think we have all of that growth ahead of us in digital assets and blockchain.
When you're looking to invest in the crypto space, you mentioned you're looking for layer 1s or layer 2s or interoperability. Tell me a bit about some of those companies that you're looking at.
So our thesis has always been about a multi-blockchain world. I look at this whole thesis of decentralization. That was why I started Future Perfect Ventures. I thought we were beyond the phase of having these only kind of server to computer cloud connectivity. We will always have that, but given how much accessibility, how far technology has come, how fast processing power has developed, and that really enabled Bitcoin and blockchain technology to take hold, we now can have peer-to-peer connectivity in a way that we haven't been able to do before because the technology wasn't there, people weren't on mobile phones, and so I believe that we're now at that phase where, so that layer one has been built out. It continues to be built out. It's still being scaled, but that layer two of scalability, interoperability. So I believe different blockchains, going back to that thesis of multi-blockchains, different blockchains in layer ones will serve different purposes. So we've never been maximalists. Love Bitcoin because it's the most proven, the most secure blockchain out there. But if we look at Ethereum, how it's become this reserve currency for DeFi, for NFTs, we're seeing Solana take hold. A lot of DeFi being built on top of Solana. So just like with the internet, we don't have just one company that serves every application and every purpose. We're going to have different blockchains, and then we'll have layer twos that connect to those as well as interoperate. So we're an investor.
Some of the protocols that come to mind are Polkadot in my mind. Are there other ones that you would like to highlight?
Yes, that is a great one that we were early investors in. We also are early investors in the Graph protocol. And they have been hard at work the last few years building out the Google layer, that search layer across blockchains, so that any developer can actually pull data from different blockchains, and you know what's beautiful about this sector is that it's open source, and unlike this kind of zero-sum environment that we've seen in business before, and even the internet, where control of the data was how companies built moats. We're seeing every major blockchain work with the Graph so that their data and the transactions that happen on their blockchains can be pulled so that new applications can be built. And so that's one that we're very excited about, and they've been growing very quickly as we've seen as the number of transactions grow, the Graph benefits from that.
And this kind of mirrors one of your early investments in the internet. You mentioned Yodlee. Yes. Maybe you could draw some of the parallels.
Yes. Yodlee was actually my first ever venture investment in 2000. And they started off as a single sign-in for the web. So, I mean, we still have this problem with passwords, right? Trying to remember our passwords. And they had this thesis that if we just had one single sign-in, that would be great. Now, what happened, though, was that they were very early around that, and there wasn't enough consumer adoption with the internet. Then I mentioned 2000 and where we are with crypto, right? And so what they pivoted to was serving as a single sign-in for financial institutions, for their customers. And so they became the first financial API. Plaid, which was about to be acquired by Visa last year, is the next generation, but Yodlee was the first company to do that. They went public, they've been acquired. And so that experience and that success with that investment, that infrastructure layer, that middleware layer of how do you connect all the pieces of how do you connect consumers to institutions, that is where we're very focused on, and you picked up on it right away when I described it. I believe every technology follows a similar adoption curve. What we're seeing in digital assets and crypto is a faster acceleration because it is so global and open source.
Right, a lot of parallels you can draw there from the early internet days to where we are now in the blockchain space. That was Future Perfect Ventures founder and managing partner Jack Jobin-Puccio. Time now to check in with crypto Twitter with our tweet of the day. This one from programming blogger Dan Liu tweeting, "My favorite conspiracy theory. Cryptocurrencies are an effort by time travelers to forestall the AI apocalypse via computational terrorism, making compute, storage, etc. too expensive for superhuman AIs to exist. Satoshi's identity is secret to prevent untimely termination." All right. Maybe it's all a simulation out there. That's it for First Mover. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.